In recent days, the market has turned highly volatile. Some sectors are showing weakness, some sectors are showing great strength. There is steady accumulation in certain categories of stocks. There is sustained selling in some categories. Artificial intelligence and technological disruptions are impacting some sectors. There are sectors where technological disruptions are nil or insignificant. This volatile market construct provides opportunities for long-term investors, those who have the temperament to remain patient. Welcome to Geojit Spotlight. A significant positive trend in the market this year recently is that FIIs have turned buyers. In February so far, up to 26th February that is, FIIs were buyers in 11 out of 19 trading days. DIIs have been sustained buyers for quite long, we know that. Now on certain days, the combined institutional buying, FIIs plus DIIs combined, is very large. For instance, yesterday on 25th, the combined institutional buying was rupees 8,100 crores, quite big. In spite of this, the market could not hold on to early gains. Sell-on rallies emerged. At higher levels, bears increased their short positions and the market lost most of the early gains. What does this indicate? Well, the takeaway is that valuations, particularly in certain sectors, have become fair, warranting buying by smart money. But when the market rallies, valuations get extended in some sectors and sell-on rally emerges and bears increase their short positions. What should investors do in such a market situation? Investors should understand, particularly those investors who came to the market after the COVID crash of 2020, that at certain times the market can be frustrating. It can be hugely frustrating, testing the patience of investors. Therefore, this is the time to show great patience, remaining invested in the market and continuing to buy, accumulating, that is, high quality, fairly valued stocks in financials, automobiles, capital goods, etc. would be the right strategy now. Accumulate stocks, high quality, fairly valued stocks. Even if the valuations are a little bit higher, like in automobiles, there is very high growth justifying the valuations. So accumulate stocks in these segments and wait patiently. Your patience will be tested. Those who panic, sell, and get out of the market will lose money. There is no doubt about that. One study done 2 years ago revealed that 90% of Indian stock market investors, 90, have an investment time horizon of 1 year or less. These guys are not investors, they are traders in the market. 5 to 6% have an investment time period of 1 year to 3 years. And around 4% have an investment time horizon of more than 3 years. So, to summarize, 90% have an investment time horizon of less than 1 year. 5 to 6% have an investment time horizon of 1 to 3 years. Around 4% have an investment time horizon of more than 3 years. The first category, 90%, always lose in the market. The second category, 5 to 6%, makes money in a bull market, like the recent bull market like we had from April 2020 to September 2024. So the second category makes money in a bull market. The third category of 4% investors, only 4% of investors who invest for more than 3 years, always wins in the market. Always wins unless they do something stupid, buying low-grade stocks, cheap stocks, penny stocks, like that. Stock market investment is for long-term investors with more than 3 to 4 year time horizon. For the short-term traders with less than 1 year time horizon, those who get frustrated by the market, sell and get out, they will lose. Long-term investors will make money. Patience pays. Investors can decide which category they want to belong to. There is a saying, those who don't learn from history are condemned to repeat it.